Ladies and gentlemen, let's start with another session, which is once again about unlocking accesses, trust, and mobility in financial ecosystem. And for the same, I would request the moderator to join on the stage, please. Ms. Smita Jha, partner, banking and finance, financial services, and FinTech Khaitan and Company. Let's have a huge round of applause for Ms. Smita Jha. And now I would request speakers to join on the stage, please. Mr. Janaka Karunaratne, Deputy Governor, Central Bank of Sri Lanka. Mr. Sachin Castelino, let's have a huge round of applause, everyone. Chief Strategy and Transformation Officer in Solutions Global. And the last, Mr. William F. Matambo, Deputy Governor at Reserve Bank of Malawi. Requesting Ms. Smita Jha to kindly begin the session. Thank you.
Hi, everyone. Yeah, this seems to be working. Hello, good afternoon, everyone. It's an absolute pleasure to be a part of this session and moderating a panel on trust and mobility in financial services. As esoteric the topic may sound to all of us in terms of what really means by trust and mobility in financial inclusion, it really takes me back to my younger days. Back in the 90s, I was really young, 7 or 8 years old, and my father took me to the then Grindlay's Bank, operating a small unit in the town called Kanpur, and showing me what an ATM was. I was thrilled to see that money was actually accessible in that form. He didn't really have to go to a bank branch, show a check, and try to withdraw cash from the bank. And this was something that was readily available. What that did to me was twofold. One, it created this whole excitement about the fact that we as a family actually had access to finances in a very readily available fashion. And the second thing that it created for me was a sort of a confidence that when I am in need of cash or money, there is a system which is in place which is going to, make that available to me. Obviously, I was a child, and those were the thoughts that came to me. As a lawyer who has been working in financial services for good 15 years, the understanding has just gotten deeper with the 30 years back where ATM was exciting. Today we are dealing with things like UPI, stablecoin and all. And the access and mobility of it really denotes the trust that at least the Indian financial system has managed to create for its population. So with that small note, I'm really thrilled to have Mr. Janaka, Mr. William, and Sachin on this panel, and we would love to hear your diverse perspectives. I wanted to start with the, what exactly financial inclusion really means to each of you, with your diverse backgrounds, the kind of countries that you're coming from. If you could just throw some light on that. We should start with you.
Okay, good afternoon, everyone. Thank you very much. In fact, theoretically, financial inclusion means equality in access to formal financial system by every individual in a society country. But if you look at many countries, especially developing or even developed countries, still there is a number of population which does not have access to formal financial system due to very many factors. So that's why it's very important from any country perspective to have a broader financial inclusion strategy to ensure even the vulnerables at the very grassroots level have access to formal financial system. If you look at from Sri Lankan perspective, now even though our broad mandate is in terms of the law, price stability, economic and price stability, as well as financial system stability under the new Central Bank Act, it has been identified financial inclusion as another important objective. So in order to facilitate that, in 2021, we launched a National Financial Inclusion Strategy, what is now known as NFIS in shortened form. So which consists of 4 pillars. Let me explain very briefly given the time. First pillar is digital finance and payments, then MSME finance, then financial literacy and consumer protection. So when you say financial inclusion, the literacy play a very important role. So under our strategy, we have identified about 80-odd actions under about 26 broad objectives under each of these pillars. I can easily connect digital finance and payments also to inclusion. I think this is one of the broader topics in this whole forum. So under the digital finance and payment system, what we want to do is how to facilitate the grassroots level people to access formal financial system, because under the traditional model, it's very difficult. Now, if you look at modern commercial banking systems, their focus is different as opposed to historical model they followed. So basically today, they focus on few large scale borrowers, customers. So they are moving to the grassroots level for either to deposit taking or lending is very limited because of the cost structure. So today we can't follow a branch-based, physical branch-based approach. So there are these high-tech products, FinTech products, and digital way of banking is very important. So as I mentioned, the central bank has identified this as a very important role and playing a lead role with the support of the banking system and other stakeholders to ensure within next few years our society is to a comfortable extent financial inclusive. Thank you.
Thank you. That's very interesting to know that as a central bank in Sri Lanka, they are really pushing the bankers to adopt digitization and move towards digital banking models and all. I would just like to take a small segue from that. And Sachin, you really come from the FinTech background in that sense, right? Financial inclusion technically has been a mandate for the formal banking sector. But when we think about FinTechs, what is your perspective on financial inclusion?
So the way we look at it, and the way at least I look at it, since InSolutions Global comes from a FinTech, but we work with traditional banks as well. What we have seen is that the initial wave of financial inclusion was just initial access, right? So initial access to bank accounts, initial access to digital infrastructure, identification, and that's what led to the whole Jan Dhan Yojana, and 60 crore bank accounts opened up, and these were all potentially zero balance bank accounts, right? So, but at least there was an initial start into the access to digital infrastructure. I think the next phase that is coming in, and the government is doing a lot, which is where then us fintechs also end up playing a role, is around financial resilience, right? So the next stage and the next phase in this journey would be what we sometimes take for granted, right? So the ability to access to credit, access to insurance, access to the various next levels of just other than just just a bank account. So the way we look at it is how do we work with some of the traditional banks, especially in the public sector. Okay, so while we work quite well with the private sector as well. The one that we're seeing right now is that the public sector is also starting to open up to be able to see how they can use their reach potentially Because in a country as diverse as India, for us to say that, okay, everywhere there's going to be only digital infrastructure is a little difficult, right? So we need this entire aspect where it has to be, that there has to be people around, there have to be people around to help in the literacy and help with that aspect in sort of a language that everyone understands, right? In that particular cohort or the particular ecosystem. So which is where, and one great example of this is for example, like India Post Payments Bank, right? So one of the things that they have done is the postman, the feet on street that they have is the ability to leverage that to be able to say, okay, let's move literacy off the banking ecosystem across to them, right? So I think there will always be a balance, especially in a country as diverse as India. But yeah, I think the next phase is regarding the entire resiliency and financial resiliency and for people.
I would definitely agree with that. I think as a country with such a huge population, going only one way is not something that is, that's a workable solution. Picking up from that, William, what is your perspective on where you're coming from? So from a Malawi perspective, how do you envisage financial inclusion? What is the conversation discourse around that in your country?
No, thank you so much. I think I wish to start by giving people a view, because I suspect there could be a number who don't even know where Malawi is, right? Malawi is in southern Africa. I think it shares borders with 3 countries. Mozambique, which engulfs possibly 2/3 of the country, and then Zambia in the west and Tanzania in the north. So that's where Malawi fits, and we are a relatively smaller country in terms of the African continent. But nonetheless, I think we have a resolve to make significant inroads in the area of financial inclusion. And I think it's for a good reason. We know that a financially empowered people are also good for so many things in the economic management of any country. So I think where we see it is in a situation where the literacy levels are not as high as most of our neighboring countries, but nonetheless we are making progress. And by 2013, 2014, our surveys showed that the financial inclusion was around 49%. So I think through the initiatives that have come with the digitization process, I think we have now moved to 88% in terms of financial inclusion, which is quite a big way in terms of leapfrogging and catching up with where the world is. But I would want to go back to what you said. Our measure of financial inclusion is specifically looking at how many people have access to financial products. So I think we have taken great inroads, or we have made great inroads, because essentially of mobile technology. I think we are modeling it around the Aadhaar scheme of things, I think to use the Indian example, where we're using the national ID to basically identify and provide support in different ways to our populace. So I think with that, we believe that financial inclusion will still be a top agenda item. We will be extending those products that you talked about, for example, insurance. We have not yet started doing that. But obviously on credit, we have started to do something around credit, so we are able to offer credit to people using the mobile technology. So I think to us, that's how and where we are in terms of financial inclusion in Malawi. Thank you.
I think that's fantastic, from 40 to 88%. On a lighter note, we definitely know where Malawi is. It's a beautiful country. And we really hope UPI reaches there soon, so that Indians can come over and transact. Um, I would like to come to you and just to put it on record, Sri Lanka is also an equally beautiful country. I would want to understand that when we talk about financial inclusion and all, access to credit is important. And most countries globally have devised some sort of a credit scoring system, which is, which revolves around very, very regulated kind of data, very well kept and accounted for data. From a Sri Lankan perspective, could you, just throw some light on what exactly are the steps which are being taken to bring alternate data into, the focus and probably augment financial inclusion efforts?
Okay. That's a very good question. If you look at the credit, access to credit, one of the important elements is the credit history. In the formal financial systems, the key source of evaluation of a credit history of an individual or entity is through our Credit Information Bureau data. So we have set up what is called CRIB, Credit Information Bureau. That's a national organization, public-private partnership, so which sets all the records of formal lending by regulated entities. Basically, the member institutions of CRIB are the banks and finance companies, so which have a detailed credit history. Now, up to about 2021, so simple methodology has been, it's a record of credit, maybe identified as clean credit or the performing credit, non-performing credit. But in the recent past, CRIB has developed a model which provides a credit score, which probably ranges from around 100 to 900. It's like a more or less an international credit rating. So the advantage somebody have is, it's rather than whether you have performed your credit well or non-performed, it's a bad, but it gives a score which any lender would be easily find it to evaluate the risk level. So let's say, for example, if your score is maybe 700, 800, you probably have a higher rating, which helps from a lender's perspective to assign a higher, lower risk and also assign a better credit pricing. Then, of course, if your score is little lower, but still you are able to access to credit through a formal system, but maybe at a higher price. So it gives some comfort from the lender perspective as well as from borrower's perspective in a transparent point of view to access to credit. But of course, if you look at the grassroots level, the issue has been not many grassroots level individuals or entities does not have a proper credit history because their access to the formal financial is very low. So only in the case of the entities, individual who have access to the financial system has a credit history and access to his or entity's own score. But then, so how to ensure, now we started with inclusion, so how to ensure that sector is eligible to the access to finance through the formal instrument. Otherwise, usually what happens in any country, or even in our case, they access to finance through the informal sector. The cost is very high in the informal sector and also risk is high. So what we are, already we have taken initiative to build a credit score for the grassroots level, individuals and entities through other means. Even though they haven't had access to the formal system and does not have credit history, we are in the process of building, we will almost in the final stages of completion through the other service provider. For example, anybody uses electricity is been paying the electricity bill, monthly paying bill. So he has some record through the electricity service provider, the water bill. Then also if you look at individuals, I think more than the population, there are mobile phones. So even though they are not savvy with the access to formal finance, they are very technically savvy with using a mobile phone, even at the very grassroots level. Okay, so through the mobile service provider. So there's a greater history of even credit, no even mobile service provider. It's like a 30-day, 60-day credit. So you have a very good record of credit as well as your usage. So through such providers, as also like the insurance companies. Now, most of even at the grassroots level, there may be people who have already covered through different, ways of insurance. So likewise, we have identified those providers, utility service providers, as well as such as companies like insurance, to build a new score for those level people, the grassroots level and individuals as well as the grassroots level entrepreneurs, especially the micro enterprises. So which definitely support them to access to, because it is also through CRIB, so that any formal institution can access to the credit history of such a person or entity, which will give a comfort for them to assess carefully the credit worthiness of such an individual or entity. The second step is basically, it's again a very recent movement. Now we have our own rating agency, Lanka Rating Agency. So we have recently signed an agreement, CRIB has signed an agreement with them to build another score, especially focusing on small-scale entrepreneurs. Probably they do prepare their financial statements, they are not listed, but also didn't have any possibility of accessing the formal financial system, right? So through this partnership, we want to bring the records. Some would have definitely has access to formal financial system. So there may be certain records already in the CRIB, which is to be coupled with the financial information through the financial statements, their accounts, so that which will help them to come up with another score, so that banks are more comfortable, or the other lending institutions are more comfortable in providing credit to those customers as well. Third point is, as I mentioned, out of the 4 pillars, I think I said under NFIA's 4 pillars, financial literacy is an important pillar. Digital finance and payments, MSME finance, consumer protection and financial literacy. So central bank has played a very lead role in the financial literacy. Now if you look at as a country, our general literacy is very high. It's above 90% throughout the history, right? But of course, when it comes to financial literacy, still financial literacy level is below 60%. There's improvement, gradual improvement. The recent survey in 2021, it has gone up to about 57% from about 35% in 2014-13 level. But still, there's a lot to do in financial literacy. So when it comes to the small-scale entrepreneurs, especially, they don't maintain their accounting records, business records. So which is a hindrance to access the formal financial system. So the third, as I mentioned, this individual credit score, then the coupling with the rating agents to provide a score, as well as through literacy to enhance knowledge to maintain their own financial statements. So that will give a history to access to formal financial system. So I think all these measures would definitely will be helpful for the sector which cannot access the formal sector to easily access the formal financial sector.
No, I think that's a fair play that you talked about, because we always talk about financial inclusion and getting the underserved within the realm of economy and giving them access to other financial services. But I think for any financial services, the idea is that it needs to work both ways, right? No lender, no creditor is really going to give credit to people who are, who have reflected or have showed on bad credit behavior and all. So I think all of these efforts are obviously, the most, some of the most commonsensical measures to be followed. And it's good that as central bankers, that's being picked up. Sachin, I would like to come to you on these aspects itself. So, one part of it is getting the alternate data within the realm of technology, running the analytics and all, and, coming up with the alternate ways of figuring out credit behavior and all. And technology really plays a big and important role. Coming from that FinTech background, and there's immense innovation that we've seen in the payments system. But if you had to throw some light on what is going to be the next generation of that technology, whether we are talking about credit or payments, the kind of things that you would like to talk about or you would bet on.
Sure. So, see, as we are seeing today, right? So AI is something that is sort of changing the way even we think, right? So there are so many things that we had to think about earlier which we don't anymore. I think the one thing is definitely access to data. So the ability to be able to get these consumers onto some sort of an ecosystem where they're able to give some sort of history. So, but now with AI coming into play, there are much more varied models with which we can start to play, right? So that definitely helps. And if we see across history as well, it is when we have had this sort of like a monumental leap or an exponential leap in technology is when we have seen a shift in society as well, right? So AI is one that is there. And I think what's coming on the horizon, which would be, I think the next wave that would further enhance this would be something around quantum computing that would help. So what this would do is that further help us think faster, effectively, right? So as ecosystems, we'll be able to further think through. Okay, if we've got so many interactions going on with one person, okay, what are the various sort of patterns that we can see for various cohorts and even for hyper-personalization, right? So which is where then to see today we've already done it with the advertising, right? So everyone's advertising is different. Okay, so tomorrow it can come to a point where we do that for credit as well. It'll no more be dependent on just policies across, right? So rather it'll be based on a lot of data that comes through. I think there's a lot of work already that is done via AI, but then the speed of computing and that will be the next wave that will bring this further to fruition. That's the way I see it.
No, fair enough. I think innovation is universal. I think globally every country is dealing with innovation in financial services in its own way. William, I would like to understand from you that while innovation, like I said, is a universal phenomena, but when regulators are thinking about innovation, do you really feel the need to have global or universal standards of regulation, or how should each country be dealing with the innovations?
Thank you so much. I think it's a very interesting question because it has two sides to it. Two sides in the sense that the first side is that countries are using that regulation for competitive advantage. So you'll find countries where I think they have given so many incentives from a regulatory point of view to incentivize innovation. But on the other side, I think we also know the dangers that are there from innovation gaps or where we are not very serious with closing all regulatory gaps in the sense of letting people to innovate anyhow. So that's why I'm saying it's a very tricky question, but I'll give my views. In the first instance, let me start by the positive side. I think from a regulatory point of view, yes, possibly it would be important if we had common standards. Why? I think we have seen a lot of progress in the last few years, progress like no other time in history. So when you look at it all, you also know that this innovation is coming up with very, very serious challenges for so many countries. I think for once, if you have to assess many financial institutions in many countries, what is your number one risk? I think cybersecurity comes as number one. Because I think with those people who know how to beat systems, they can easily sweep and ground your entire payment system just like that. So if we have global standards that reinforce and that make sure that each and every country has a robust system of regulation, I think that would be very, very ideal. The second one, why it might be important to have an international regulator is to even the playing field. Because I think we also know that in as much as innovation is good, but if the playing field is uneven, it will also create economic distortions across the world. And that might not be the ideal that we are all looking at. So in a nutshell, I think that's for innovation, or for having global standards on innovation. But on the other side, like I said, if we also overemphasize on innovation by creating these global standards, there is a risk that we could also now discourage innovation itself by increasing the cost of doing business. If we overregulate, we all know what happens. It becomes very difficult for anyone to do something that is meaningful. So I think in a nutshell, I want to balance it that way, that there is a greater need for global innovation, global standards on innovation. But as we do that, we must be careful not to create an environment that is hostile and therefore thwarts innovation that we are all proud of and we are all leveraging on to make inroads into our economic management. Thank you.
Thank you. That was excellent. I mean, we would all agree here that any kind of growth is actually in balance. We can't really, encourage one side of it and while completely ignore the other. So, yeah, full points on that. I think we are running short of time. Keeping the theme of this session in mind, trust and mobility and all, if there was one problem that had to be solved by technology or by policy in ensuring access to financial services, what would be that one problem that you feel that is required to be solved and, that could be a takeaway for the gathering over here to think through and, of course, innovate on that?
Okay, before that, let me add one more thing about regulation. If you look at FinTech and other related digital payments, I think we cannot apply equal regulation for a financial system stability. It should be more proportionate to protect the customers and the public. But when it comes to your last question, so I would place the acceptance, trust, and confidence. So if you don't have that, it's very difficult to promote, whatever products or whatever new technology is going to be there. So if you have trust, confidence through literacy and other means, then, and also along with trust and confidence, the protection, customer protection. That's why in our strategy, consumer protection has been one key pillar. Thank you.
Your thoughts on that, Sachin?
Yeah. So for me, I will speak from a FinTech standpoint, and I think what we have is, from a FinTech perspective and an ecosystem, to think about balance in the way we approach the market. While regulation will keep coming in, and while FinTech will try and keep innovating, and everyone will try and keep innovating, and then there'll be regulation, right? And that's a cycle that goes on, okay? And I think building that resilience internally within the FinTech ecosystem and within those organizations as well is important, which is where, so balancing what the motives or objectives of a FinTech are will be critical for us, for some of the longer term FinTechs to continue and to provide value to the entire national ecosystem and international as well then.
Thank you, Sachin. William, your last thoughts on?
Yeah, I think to me, it's all about bringing the cost of business down. I think the more we are in the FinTech space, what we're looking at, even from a regulatory point of view, is for you to be able to bring down the cost to the user, to the consumer, and even to businesses. I think that's what will make a significant difference. We have already seen how FinTech and technology in such has changed the way we have been doing things. But still at the moment, especially when you look at cross-border payments, the average is possibly around 8%, but in most jurisdictions it's as high as 15 or 20%. That excludes a lot of people from doing business. That excludes a lot of people from enjoying the benefits of technology. So I think as we move forward, to me, my appeal is let's work together to ensure that we reduce the cost of doing business. Thank you so much.
Thank you. That's fantastic, William. I think cost of doing business, reducing that should be paramount, and I'm sure everybody here would agree to that. We do have 2 minutes left, and we would like to open it for the audience if anybody has a question. Please do address the speaker whom you need the answer.
This is for the two central bankers here. The alternative way of credit scoring, which you were speaking about, very exciting that you're looking at digital footprints. And then there is the whole thing about spends and cash flow being another model which is different from the past. But from your elevation, do you see this as something which will become proximate? Is it close, or is it far, or is it already happening? Very keen to know how you're doing that.
I think along with that, the literacy is very important. So that's why I said it's not purely what we do, right? Building a score, but education which will help to build a score, right? So then if you look at, as I mentioned about maintaining accounts, probably even very good businesses which do not have accounts cannot access. Because in our context, mainly they rely on, the formal institute rely on the collateral. So that's the trend, I think, even in this region, that's the trend. But while we promote lending through cash flow-based lending, but especially when it comes to the grassroots level, they don't have any means of showing their cash flows. So I think on top of building the scores, literacy plays a greater, role in this whole saga. So I think with literacy, coupled with, what are the measures taken right now, definitely we can reach to a comfortable level within next couple of years. Thank you.
The important question being, what do you, in your experience, see working for literacy in countries like us? How do you spread financial literacy? Is it baked into curriculum? Are there other things that are working for you?
Exactly. I think, as I mentioned, under our NFIS, it's one key pillar. So it's not the central bank alone. There are a number of stakeholders, government ministries, then other regulatory bodies like Securities Exchange and Commission, Columbus Stock Exchange, Insurance Regulatory Commission. So it's a combined exercise. And also, I think the question you asked, how to bring it to the curricula. So that's also started through the Ministry of Education, that there are a number of key important areas where student at the student level should focus has been brought in. So with that, I think there's quite an improvement in literacy level as somebody even leave the school, so that they will be easily able to access to formal financial system.
So we have some time for a few more questions if anyone has any question. Last 2 questions we can take. One.
Yeah, my name is Kunjan. Hi. This is extension to what it was just asked on the digital footprints. I understand you talked about customer making payment for electricity, right, or internet or mobile payments. Those can be considered as one of the check scores, or the cash flows of the consumers, right? However, it doesn't show the intent of the customer to pay, because these are very basic. It's like we call it a roti kapda makan, right? I have to pay the electricity to survive and run my household. I have to pay my mobile to make calls to my friends and relatives and work. However, if I take a loan I don't have to necessarily pay back. I might have a other intention. So how do you see that using these indicators for building a credit score?
Even if you take a normal loan with a large company with a high credit score, still there's a probability of default. He may not default. So there's always a risk associated with lending, even by a highly rated company. So it's obvious. But the model is such a way through the cash flows, it can capture certain risk levels, right? So that will help. So this will not happen overnight. As the data is built up, through the system over the, many years, then definitely there's a possibility of identifying cash flows which gives some sense for an institution able to pay. And from where definitely, he's getting money, even a small scale business, through the accounting data, which is captured through rating agency model, provides some mechanism of, or some form of data to determine the ability to pay. So this is through model. I mean, model will tell some, maybe through a score or guidance to decide on the ability to pay. So this will, over time, this will evolve.
So I understand this is relevant. It was more in the context of the countries or the markets, the nations where we don't have the formal credit system, where we don't have transaction history. For example, country like Malawi or the other countries, right, across the world, where we still don't have, there's no formal credit system, right? So how do these parameters, in absence of those formal credit system, right, will assist? I understand the risk is always there for the lender, right? Even if I have a strong, in a country like India, where we're sitting right now, we have a strong credit history, right? But still, there's a risk, right? But for the countries where we don't have the transaction history, or the loan history, or the credit history, or even the credit score system, but still, do you think these indicators helps or assist in the lending?
Definitely, because we have to see the results. Still, the model has not been completed. So once we develop the model and in action, then we have to see the results. So then only we can really answer your question.
If I may add, I think you talked about Malawi. The telcos that you are working with are all extending credit, by the way. And if you ask them how they are extending credit, they will tell you that they analyze the same things that they see, the transactions that he's talking about. I think now, using analytics, you are able to still see whether someone is capable of getting credit and having the capacity to repay or not. And I think using those analytics, they are able to determine how much they can extend to each and every person. Yeah, so I think it's possible in simple terms, because even in Malawi, which you used as your example, we are already doing that.
Well, thank you. Thank you for the engaging session. And I would request you to kindly rise for the group picture. Let's have a huge round of applause, everyone.